3,000 options contracts on 3M. This was just done at 2:19 p.m., which was less than 5 minutes ago. It is now 2:23 p.m., May 22. So make sure, if you want to be notified of these unusual options, you are subscribed and you have the bell icon to notify you whenever we detect unusual options like these. So without further ado, let's get into what this analysis of these unusual options are telling us, and then show you how we are trading it based on these unusual options. So if we look at 1 minute ago, you'll also see that there was also 450 contracts as well as these 3,000 for the same strikes. We believe these are the same institutional investor who is doing these trades. And so when we look at it together, we'll have to look at the totality of this. This is 3,450 of them. And so when we look at that, at the June 16th, you'll see here the 3,450 is definitely greater than the open interest here at the 100 strikes. Also here on the call side, the open interest is also 3,450 is also greater than those. So we know that these are all opening orders. Okay. And so what we think is going on is they are selling this call, which they can collect a better extrinsic value at 2.45. And so by selling that call, and then they're buying the put, which is it's less than that extrinsic value of the call side at 2. So they're buying that 100 strike put. And so when you look at this analysis in the profit loss diagram, you'll see that this is a synthetic short. 101 is the current price. As it goes down on the X axis, which represents price, this is going to be more profitable as it will be above this zero profit loss on the y-axis. And so if it does increase, it will be a loss. As you'll see here, anything below that zero line is a loss. So this is why this is a short, and you'll see that also on the Greeks. When we look at this, is basically negative 98 delta. So it's like shorting 98 shares of 3M. And so the way we are trading based on this unusual options activity is a little different. It does take a lot more buying power to do a trade like this because you're selling a naked call in this trade. So the way we are trading it is we're taking also the same June 16th. Instead of buying it, we're going to take advantage of this price that has been pushed up by all this these contracts being bought. Instead of buying it, we're going to sell it. And by selling it, you'll see here that we're selling an extrinsic value of 2. And then we go to the July, which is 60 days away, and we're going to buy an extrinsic value of 2.2. And so then we're only net 0.2 on the extrinsic value. So we're not going to have so much excess extrinsic value, which is the cost of this trade. So when you look at this trade, we basically made a bearish diagonal trade, which is here, and as the same as the synthetic, as this price goes down, this will be a profitable trade. And what you'll also notice that one of the advantages of this trade is you'll see the break even here, the expiration is actually higher than the current price. So 3M can rally all the way to this price level, and we would still not be at a loss. So 103.67 would be our point of break even, where we would incur a loss at expiration. You'll also see we have a positive theta trade as well. We still have that negative delta. It is negative 23, not as strong, but that's also because we're not spending as much. We're only spending $355 for this trade at this current time. The price is $355. And so what we would do for this trade is, at this 103, about 103 point, this break even, it sort of changes slightly. Let's try to get it there. Well, it's around that 103.7 level, right? We would set a break even alert around that level at 103.7. Anything that once it goes above that, we will be reminded to close this trade. But we are bearish, just like those unusual options activity, taking advantage of this rally today in 3M of 2.6% to short this stock with this diagonal bearish trade. And so this is what our current position is going to be. You'll see this nice rally today, but we don't think it will continue to rally. If it does, though, we would cut our trade, and there would be a minimal loss here, not much of a loss here, because we had sold the 100 strike puts, which allows us to also reduce the risk at the same time. And so this is how we are currently trading 3M. Please smash that like button, really helps our channel grow so we can continue to make more videos and share our knowledge with everyone. And please comment below on what you think about 3M. Do you think it's going to drop more? Can it drop more? Let's look at the 3-year mark. Well, it has been on a downtrend, as you can see, ever since 2021. So how far is it going to go down? And that is why this short is on it, because the trend is down. And as you may know, the trend is your friend. Thank you, and take care, everybody. Good luck, my friends.